Mr. Vinod Dasari, CEO with Royal Enfield, joins us now to talk about how things will pan out for Royal Enfield, the auto sector, and the premium biking segment. Mr. Dasari, fantastic to have you back. I can see it's a new year and a new look. You're joining us in a t-shirt instead of a jacket.
Oh, well, I always wear Royal Enfield apparel. I'm proud of it. They do a great job. Thank you.
Mr. Dasari, last time when we spoke, you were reasonably confident that demand would come back. And demand indeed has come back. And demand has come back in a roaring manner. Inventory levels are low, order backlogs are there for Royal Enfield. My question to you is that why there has been such a spurt in demand? Because the comeback in demand has been nothing short of mesmerizing.
Well, demand has come back partly. Originally, I think it was a bit of a pent-up demand. Then maybe there was some element of people wanting more personal transport. Public transport in many places had not started. And some people also probably felt that it is safer to travel personally rather than take public transport. So those are the elements that have come back. But interestingly, it has come back not just in cities, but in all areas of the country. The Tier 3 is doing better than Tier 2, and Tier 2 is doing better than Tier 1. So it's good news.
Okay. Looking at what indications we have when we do some dealer checks, we understand that there is an order backlog which runs into months now. Do you see this kind of an volume visibility for 2021, the entire year, for next 10 to 12 months?
Oh, we don't want to keep our customers waiting for too long. Yes, we do have an order backlog. And in some models, as you rightly say, it is in months. But we did have a very successful launch of a product called Meteor last quarter, which has done incredibly well. We have a series of new products, as I had talked earlier, that we will launch one new product every quarter. And so we have that planned out. So hopefully we'll continue to keep the demand at a high level.
The backlog there because of disruptions which happened in your Chennai plant, or this is demand in your inability to service the demand?
No, it's actually demand. It's not. We had originally had supply chain difficulties where some suppliers were not able to deliver. But December production was very good. We had an all-time high retail as well as all-time high wholesale also. And yet, as you said, you checked on the dealer inventory, we are maintaining about 2 weeks or lesser than that.
Okay. When we spoke last, you did mention that there was supply constraint at the Chennai plant. Have they been sorted out?
To a large degree. Lately, there has been a shortage of steel, very spotty. And entire industry is facing a steel shortage. And in fact, I think Society of Indian Automobile Manufacturers has written to the government to lift the ban on imports on steel, because not only availability is weak, it's also very spotty even in the market.
Okay. What is your view on where exactly things would move once things normalize? The reason why I'm asking you this question, and when I say normalize, vaccines would be there, corona numbers will stabilize. One reason, like you also mentioned, is that there was a spurt in personal transport demand because we all wanted to use personal transport as a mode of transport. When things will start normalizing, when public transport will start, do you think this pent-up demand will get crushed?
No, not at all. I think there will continue to be a demand because of what I said earlier. Pent-up demand will go away, but the demand due to people wanting more personal transport will continue to remain. Equally, I think there is a move towards premiumization. If you look at the motorcycle industry just in the month of December, the entire growth, I mean, just if you look at motorcycles by itself, they did not grow less than 125cc, but the large segment grew by about 30-35%, largely driven by Royal Enfield. So I think there is this trend of going to personal vehicles as well as going towards premium vehicles. Now you take that and you add on top of it a series of world-class products that are being delivered in a very digital savvy way. I hope that bodes well for us.
I'm looking at some numbers here and we've taken the clock back, the volume growth, and I'm being specific here because I'm just trying to gauge how excited you are about the premium biking segment. On a CAGR basis, do you see scope for premium biking or premiumization in Indian industry to grow at double digit? Because between FY15 and FY20, this category grew at about 17-18%. For next 2-3 years, 3 to 5 years, do you see a double-digit growth even on a higher base?
Absolutely. I think the premiumization in Indian motorcycle industry is going to continue. Royal Enfield is going to lead the way. More and more competitors have also started to enter this, which is a clear signal that the industry is actually adding more and more in this segment. So, but we are focused in the mid-size segment, which is 250 to 750 segment. There's lots of players who are wanting to enter, who also make a 250 to 750 cc's motorcycle, whereas we are what we call internally as an inch wide and a mile deep, because we are only focused on the 250 to 750 segment. So as the premiumization happens and more people move towards a mid-size segment, it bodes well for us in that category.
Vinod Dasari, when auto demand slumped in 2018, and I'm not referring to two-wheelers, I'm referring to even four-wheelers, auto industry came out and they requested government and they made a case for GST cut. Guess what? Sales are back, demand is back, and GST prices are still higher, which means the Indian customer does not need a GST cut.
At that time, it probably was required, not at this point.
Okay. 2019 was a tough year for the auto industry, including RE. 2020 was a challenging year. Do you think these 2 years of compressed demand now will be unleashed in 2021, 22 and 23? Is that something which we should focus on?
Absolutely. I think, the auto industry was down about at least I can talk more about RE in 2019, 20, we were down about 20%, and this year it is now coming back. But first 9 months or so was down. In December to December, we are actually better, but I don't think we'll catch up to what was last year. So we have two levels to catch up. One is to catch up to 1920 and then to catch up to an even higher level. So there is at least a 30 to 40% upside just to return to where we were. And after that, there is continued demand growth because of the premiumization that we talked about. So we are quite excited about it. But equally, we are not just focused on the India market. In most of our export markets, we are actually having higher retails than last year on a YTD basis. That means despite COVID and despite all the container shortages and all the issues that we faced, the supply chain problems, our retail is actually higher than last year. So the growth in network and globalization that we talked about earlier is actually starting to pay off now. So India market is likely to come back. Equally, our presence outside India will grow. We're still only about 4 to 5% outside India, so that's a good opportunity for us.
I'm going to take a leaf from your earlier comment, which is that this segment which you represent is an exciting segment, and that is the reason why competition also is looking at launches. Now, if competition kicks in, that is an endorsement of a big market size, but that also means that market share erosion will happen for you, and it could also lead to a price war. Are my assumptions right?
No, I think I look at it rather than a negative view to this. I look at it in a positive way. I say that the more new products are launched in this segment, the more customers will actually look at this segment. And when they do look at this segment, there are others who are offering one product or two products in this category of 250 to 750 cc. We offer so many permutations and combinations. Meteor alone, because of this MIY program that we had launched, has 500,000 personalization options. There's no other motorcycle company in the world that can offer that level of options for personalization to a customer. So when I say we are so focused on this and we have such a wide variety of products and options, people will look at the segments and then start to migrate to us. So the more new competition has come, actually it has increased the market size, not kept the market size the same, and we are all fighting for the same pie. So the market size growth will happen, and we continue to have a high market share in that segment, which bodes well for us.
How many years before we flash on ET Now screen that Eicher monthly dispatch numbers have reached to 1 lakh? When do you think you'll reach that number?
People always ask me, can you forecast 5 years from now? I said, I don't know what will happen this month, much less talk about 5 years from now. That's the volatile world we live in. But hopefully in the next 12 to 18 months.
Okay. How are you planning to use the cash which is sitting on your balance sheet? You're a cash-rich company. You've conserved more during the COVID period because of cost cutting. Ultimately, shareholders would say that with so much of cash, either you should give it back or you should expand, because it will start having impact on your return ratios.
You're right. I mean, when we talked last in August, I had said we had 6,500 crores of cash. We now have probably added about 1,000 crores to that, and we crossed $1 billion in cash last time I looked at it a couple of months ago. So yes, there are three options. One is to invest continued on new products and digital options and international markets that we are continuing to do. If we become capacity constrained, they probably not right now, but maybe sometime in future, we will require some debottlenecking. We are already starting to do that, but not large plant expansions. We are doing CKD plants we did one in Argentina. We'll do one in Thailand soon. We will do probably one in Brazil. So these are smaller investments. We are investing quite a bit into our electric vehicle program. So we have certain amount of capex. Is this going to consume cash more than we can deliver cash? I don't think so. We will continue to keep adding to our cash despite all of this. So what do we need to do with this cash? Many options are there. We want to keep this war chest and try and find the right use for it. Whether it is to return to the shareholders or not is something that's up to the board and the shareholders to decide. I don't want to comment on that. It is one of the options as well.
But as a philosophy, you have grown inorganically. That's been the success of Eicher and Ari. You've able to build your own platform. Given that you are a force now to reckon with, at least in India, would you be expanding organically, or there has to be a serious differentiated thinking from next 3 years in terms of an inorganic growth now? Is that a possibility? I know your answer would be that you consider all options, but every company has a DNA, and we know the DNA of the company.
It is certainly a possibility. Some people had asked us a few weeks ago, saying that everybody is partner with somebody global. Do you think Royal Enfield needs a global partner? And the answer to that from me was, I don't think so. 10 years ago, maybe Royal Enfield needed a global partner. But today, we are actually maybe one of the few companies, if not the only one, which is exporting from Chennai directly to US, Europe, where we are the fastest growing brand. In Korea, later this year, we'll also be in Japan. automotive companies that are selling in Korea, Japan, North America, from India, that's the level of quality and that's a level of excellence that we've been able to achieve without a global partner. So I don't think we need a global partner for helping us technology grow, access or something like that. We have that. Now, then the other reason why we would want to do an acquisition is possibly to say, hey, are there technology portions that we don't have and we should acquire? Maybe electric vehicle or something like that. Those would be much smaller. I don't think we'll do a massive kind of thing, even if we'll find one. And I'm only answering your speculation that we will do an acquisition. I'm not saying that we will. If there is a global player out there that fits our bill and falls into our lap, we will certainly consider it. It is not something that we will say that we will not consider. I always say that when we look at an acquisition, we should look at 3 T's. One is a technology, second is a territory, and third is talent. At least 2 out of those 3 T's should hit us very positively, and only then it's worth considering. So there are many options that keep coming to us. We keep looking. We are not desperate. We are not on a shopping spree to say we have so much cash, let's go buy someone. But we are open to any suggestions, whether small or large, to look at.
So even as you plan to move into the EV space, do you think based on the in-house technology, you will be able to have a market share dent and have a great product without acquiring technology?
Well, there are 2 or 3 ways to acquire technology. You could buy a company, you could license technology, or you could develop the technology on our own. So we are focused more on the last part and buying material from suppliers who are proven to be good in this sector. So we're learning. We built a couple of EV vehicles already. I rode them and they were fabulous. We're in no hurry to launch them. EV, as I said earlier to you also, that it's not a question of when EV will come or whether it will come, but it's a question of when. So they will come. It's not going to happen immediately. So unless the economics significantly improve, even today, I think both the acquisition cost of electric vehicle as well as the operating cost of an electric vehicle are far higher than an IC vehicle. So it is not switching yet. No amount of government subsidy is helping that also. So, but it will happen. I think it will happen in 3 segments first. It will happen in intracity buses, it will happen in intracity light commercial vehicles, and it will happen in light commute, like scooters and all. Motorcycles and all and cars will happen, but a little bit later. So by that time, we'll be more than ready.
Okay, great. The top line, demand and order backlogs, indications which investors look at, that is stable. But when do you think margins will also make a comeback? If I frankly look at your gross profit, it has been remarkably steady at the gross level. But at the margin level, there has been a decline. Are you likely to make it up? Are you likely to come back to your original ratios?
I don't want to comment on immediate plans or anything like that because we are in the silent period, as you know. But yes, long run, we do hope that margins will come back. We are one of the most profitable motorcycle companies in the world. And we had seen some decline because of the commodity cost growth, as well as the investments that we had done in our own people costs and overheads. As a result of some of those investments, now we are starting to see the volume. So overall, our overheads as a percentage of sales is practically back to where we want it to be. And we'll continue to sharpen ourselves and fine-tune ourselves. So that's not too much of a worry for us right now.
I'm just using, let's say, a peer for benchmarking purposes. Bajaj Auto gets about 1/3 of its revenue from exports, something which couple of years did not exist. It's a business they've built in last 10, 12 years. Are your plans in the export market that ambitious that nearly 1/4 or 1/3 of the business in coming years could come from exports? Is that an achievable number?
Well, we had set up, as we talked last time, when I mentioned that when we laid out RE 2.0, one of the core elements of that was that not only we will get about 20% from outside India, we also said that we will get 20% of our revenue from non-motorcycle sales, which is apparel and accessories and spare parts and other solutions that customer actually spends on after the purchase of the motorcycle. And it could be anything, financing, insurance, many other things that the customer is spending money on. And if you look at our apparel sales, it is higher than last year on a YTD basis. Our accessory growth is significantly higher than last year. So slowly but surely, what used to be only 2% of our total sales is now moving up. And so we want to have international at about 20% and the entire solution space, whether it is a apparel, accessory, and all the other things that I talked about, to be roughly 20%. So that's our long-term plan.
Okay, it's a great point. Closing comments then, just 2 more questions. If one looks at the entire Indian two-wheeler industry, you got Eicher margins right at the top, and then you got industry margins which are, some companies have early teens, some companies have middle teens, but nobody has got margins of 20 plus. The criticism skeptics always say that RE margin or Eicher margins are too high, they will not sustain, but you've proven the critics wrong. How will you continue to prove them wrong when competition is intensifying?
Well, like I said earlier also, the best way to continue to maintain our margins is to offer truly world-class riding experiences to our customers. Our goal is, our vision and our mission states that pure motorcycling is what we aspire to do. And that has several aspects to it. It means that we must provide truly world-class products. And as you can see from the launch of Meteor, it is providing a fabulous product, as well as how we provide it in a very frictionless manner. The customer can now order a motorcycle, design, configure, and order a motorcycle on his mobile phone. And today, for Meteor, practically 100% of the customers are actually designing it either on their mobile or doing the in-store configurator. And then we are actually making to the order. So we have transformed not only what we sell, which is a world-class product, how we sell, which is through this Make It Yours, and then how we manufacture. We are actually manufacturing make to order. So dealer inventory is less, our inventory is less, the speed of the clock has gone up significantly. These are transformational changes that we were able to do during the COVID times. So it is not the same old Royal Enfield where you could have questions saying, are we able to maintain the margins? It is a significantly different Royal Enfield. Having said these 3 things about what we make, how we sell, how we manufacture, I also talked about significant growth in outside India as well as in solutions. So margins will continue to come from products, but equally, not just because of the product itself, but the entire package that I talked about.
What is the risk to your bullish guidance?
I don't think I've been bullish. I've been practical and realistic. I'm not giving any guidance at all. I'm only stating that...
Optimistic. Okay, optimistic guidance. Optimistic stroke realistic.
Yeah, you can always blame me for being optimistic. I'll agree with that. I'm an eternal optimist. I believe in the India story. I think India is doing quite well and it's going to come back even stronger. Like I said, two-wheeler market had fallen by 20% in 1920 and we had fallen again in 2021 because of COVID. So there is a significant upside potential just with the market coming back. On top of it, there is this personalization, personal transport element that is being added. On top of it, Royal Enfield is adding significantly larger range of products. On top of it, it's how I bring the products to the market, digital launches, digital connect with the customers. 60% of our inquiries now coming digitally, which used to be only 10 or 15%. So we've been able to engage the customer digitally and being able to sell to the customer digitally. So I believe combination of all of these and the fact that we are so focused on growing our international markets gives me the optimism.
Well, Mr. Dasari, really appreciate your time, and must say that when we started interacting with you during the COVID period, you spoke about how you love to make aloo parathas. Now that travel, eases slightly better, I look forward to meet you in person and perhaps enjoy that aloo paratha with you.
Yes, we will together try and make one. Maybe.
Have a great day and a great year ahead, sir.
Thank you very much. Good chatting with you. Bye-bye.